Wolfe Research downgrading Qualcomm to pure perform from outperform, citing concerns over Qualcomm losing modem sales as Apple closes in on an internal modem for its new iPhones. Qualcomm shares recovered from their lows of the day, but still closed in the red. You could see down about 1% on a day when fellow chip maker Nvidia, which we just talked about, jumped 4%. So joining us now is the analyst behind that call, Caso from Wolfe Research. Chris, it's good to have you back on the show. Going to start right there with the downgrade. Why now? And haven't we heard this before about internal modems and the decoupling from Qualcomm with Apple, and it didn't actually come to fruition?
Well, we did. We've been hearing it for a while, and we think that's what changed today. It's really what drove the downgrade. That we've been hearing this for so long, and we think that Apple has finally made enough progress on the internal modem in order to get some of those units in there. So what's different now is a couple things. One is that we think Apple has made some progress, and it's not in the numbers for either Qualcomm's fiscal 26 or 27 when this would come in. In addition, since Apple signed that supply agreement with Qualcomm back in September, the stock is up 50% since that point. So it's a combination of finally we're here, is a little bit of boy who cried wolf, and the wolf is finally here, and then plus the stock is up since that situation is why we made the decision to downgrade today.
Okay. You also seem like you're skeptical based on this note on the IoT play. And we know in the last earnings recently, Qualcomm was really talking about industrial IoT.
Well, and when you go back a couple of years ago when this came up for one of the earlier times, we defended Qualcomm stock at the time because what they had in their pocket was very strong auto revenue. And, right now, going out to fiscal 26, they now have $4 billion in auto revenue that's coming in. And the nice thing about auto is you have good 3 years of visibility on that. Again, since then, the stock's up a lot. Auto is now in the estimates. The iPhone reduction is not. And what the company hopes to replace that with, which they'll talk about their analyst day in November, is IoT. And the problem is IoT, it's a more competitive market. There's, more companies in it. It's harder to get visibility. And, with auto already in the numbers, we just think that's going to be a tougher sell to investors.
Okay. I'm going to ask you a twofer here because we have AMAT earnings later this week. How much of that is a leading indicator to what we're going to see more broadly in the second half of the year with semis? And then later this month, we have Nvidia, and we know it's sold off pretty aggressively, but now people are buying again.
Yeah, so for Applied Materials on Thursday, we think, kind of near term, it's fine. We're starting to see some of the memory spending coming back. What they've already said is some of the China spending is declining for them in the second half. But really, the real prize for Applied Materials comes next year, where we see, stronger memory and then stronger TSMC spending as they bring up their 2-nanometer node. So really, that's what we're playing for on Applied Materials. The other thing we say is Intel, remember, cut CapEx 2 weeks ago. That's going to have some effect on calendar 25. Now, Applied's probably not going to talk about calendar 25 there, but it's something to consider. We think it's about a 2% impact to AMAT. With respect to Nvidia at the end of the month, listen, we think things are fine. And the bottom line there is demand is well ahead of Nvidia's ability to supply. There's been all sorts of noise about some of the product delays and whether or not the hyperscalers would step up for the CapEx that's needed. But for right now, and especially for this report at the end of the month, as long as demand is far ahead of supply, we think the company is going to sound good.